Hello, everyone, and thank you for joining us for today's webinar, Creating the Ultimate B2B Experience in the Financial Services Sector. I'm your moderator, Zoe Fernandez from Merkle's marketing team. Before I introduce our speakers and we get to the webinar content, I'd like to share some key housekeeping items for you to keep in mind throughout today's presentation. The webinar console you are looking at can be completely customized. You can resize or move any of the windows you have open. Please ask questions throughout the webinar as we'd love to hear from you. To ask a question, please submit them by clicking on the Q&A icon on your screen, entering your question, and hitting send. If we don't get your question today, we will follow up with you in the coming days. And if you'd like to revisit today's webinar, a recorded version will be emailed to you. And lastly, the resources related to this webinar can be found at the bottom of your screen. Please take a look to learn more. Today, we are joined by three industry experts: Nick Hague, Head of Growth at B2B International, Simon Calvert, Chief Strategy Officer at Gyro, and Jeremy Tate, SVP and GM at Merkle B2B. And now I'm going to hand it over to Simon to get us started.
Thank you, Zoe. Thank you for attending today, everyone. We're here today to talk about architecting the ultimate B2B customer experience in the financial services space. I thought before we got into the research, it might just be worth dwelling on why we think it's important to kind of do this work now. I think what we're increasingly seeing is that times are becoming ever more challenging. So forget the current circumstances, but before going into those, expectations inflation was rampant. People are expecting more and more from their suppliers and expecting to be serviced in many, many different ways. This is leading to increased complexity in terms of marketing challenges, whilst at the same time we're having to deal with kind of finite resources. And the downside of all of this in B2B marketing is there are absolutely no silver bullets. Every B2B brand is a collection of impressions built up over time and several moments of truth. And brands have to learn to either deliver in those moments and live on or fall by the wayside. So it makes it ever more important that we really understand what drives good B2B customer experiences on behalf of our clients. So what we set out to do in collaboration with our sister agency, B2B International, is understand more and more about what the key ingredients of creating the ultimate B2B customer experiences are, focusing on a number of things. What are the key ingredients? How do they play out over a customer journey? And how do they make the difference between a brand proceeding from one stage to another? And also, how do they mean that brands that fail in those particular spaces don't succeed on those particular journeys? So what I'm going to do is hand over to Nick, who's going to give you some first thoughts about how we approached it.
Thanks, Simon. Hi, everyone. Nick Hague speaking here. Just so background to the research before we get into it. We launched our State of B2B Insight initiative in 2019 to understand the changing dynamics of B2B decision making. And in that particular piece of research, we found out that emotions are more important than rational decision-making in B2B markets, especially when it comes to final decision of why a brand is chosen. Over 50% of the decision is based on emotions, notably trust, confidence, optimism, and pride. This time around, though, what we wanted to do is to get into more detail to understand the specifics across the journey, what the key factors are that make a difference to why brands are chosen, and what you as a brand can do at these different stages across the journey itself. So in the summer of 2000, we carried out one of the most comprehensive studies we've ever done, speaking to over 3,000 decision makers across 9 countries, 3 continents, and wanted people to recount the B2B purchasing journey for certain B2B brands. And as you can see there on the bottom left, over 5,000 data points about some of the largest B2B brands in the world, covering professional services, and in that was legal, examples of legal in the subsector, the tech space, example software, hardware, cloud, manufacturing, where we're looking at smokestack, both engineering and chemicals. But for today's purposes, we're focusing on financial and various different subsectors that sit within that: banking, credit, and leasing. But I'll get into more of that as we go through the deck today. So we wanted to design this study to help brands to be able to make a meaningful difference across the buyer journey. So we came up with a list of all things that make a difference based on experience, but also from a literature review that's published out there. Because we know we needed to cover a wide range of things that buyers look for in a brand. Some of these maybe being prosaic issues like compliance and can meet functional requirements, to other more interesting things like making life more interesting and enjoyable, and other things like being a thought leader, what impact that has on why a brand is chosen. We then had a list that we got down for pre-testing levels at around 45, but this was still too unwieldy. So the pre-test reduced this list down to 30 ingredients that we know make a meaningful difference. And as part of the questions asked, we wanted people to think about a recent purchase experience from, you can see at the bottom left in there, shortlisting of a competitive set through to engaging with brands, choosing a brand that we're interested in, and to what extent a brand would then be purchased again for the upselling and cross-selling purposes. We asked brands to be scored across the process, not just the brands that were chosen, of course, but those that weren't chosen too, and getting respondents to score the different brands across the journey allowed us to then carry out lots of advanced statistical analysis, including regression modeling, amongst other techniques, to look at each one of these steps and understand the process journey of what was making the difference to a winning brand and why those that miss out. So that's the background to the research itself. So what did we find out? What's it like out there for the financial services space and the experience that B2B buyers are putting out there? So we built this framework that, first of all, I'll share with you before getting into the detail. What we want to introduce you today to is two different types of drivers. First is the company level drivers, not immediately important to the individual, but to the company for which the individual is buying the services for. And these are typically hygiene factors. So the first superpower that I want to introduce you today is reliability. A brand needs to be trusted to deliver against some of these aspects, such as competitive pricing or adhering to quality standards. But in the main, we'd expect brands to deliver against these attributes. We then move on to the second of the superpowers, the understanding superpower. And questions buyers ask are, does the brand understand the specific needs of my company? In other words, are they on the same wavelength, such as supporting the organization, but also do they deliver the right service mix or product mix? It's not just about having the right choice of services, but it's also about having that degree of cultural alignment too. Beyond these company level superpowers, we found the key things that make a real difference are those that are important to the individual, to me, the buyer. So the third superpower we've called enrichment. And this enriches the individual's life, makes it easier, more tolerable to do business with a brand. And this might be because it's making it easier to sell the brand or decision internally to colleagues, but also offering a value exchange, such as learning new skills, or at a simple level, making someone's life a bit more enjoyable, injecting some fun along the way. This really does make a difference sometimes. And the final superpower we call preeminence. And this is, if you like, the reflected glory of working with a brand. So it might be that it's a thought leader in the category, or to an extent it matches their company vision to the wider society views. So these are the superpowers. There's 4 of them. And on the next slides, we'll uncover what the 30 value drivers or ingredients that sit underneath these that build out these experiences. So the research allowed us to understand not only the key ingredients, but where the process they are along the decision journey process, where they're impactful. This is a really busy slide, so let me walk you through this to get the key salient points across to you. So the way I want you to view it is as a process, which is shown probably in the top is easiest, in the columns from how brands start to become part of the consideration set through to how they're whittled down to a select few, asked to quote, give a proposal, and then, absolutely chosen regards into upsell. And the dots underneath each of those, they signify stages where it's a driver of the purchase decision. And what we can see on this slide is that there's 6 ingredients that are all important at each stage of the buying decision, no matter which sector you're in. So that might make sense for some of those in the reliability superpower on the top row there, such as being competitively priced or mitigating risks, hygiene factors. Brands need to deliver against these. What we found interesting specifically was that, outside those reliability factors, ingredients such as thought leadership are important across the entire journey, not just at the front end, top of the funnel, with regards to brand building. And another interesting point you can see on the bottom there is that there's an increasing expectation that brands have this clear vision and work towards fulfilling that in a society that we now live. And it's the extent to which brands do this throughout the whole journey, no matter which sector, which is a key takeaway. So that's what's important, but how well do brands deliver against these factors? What you can see here is, how well brands fulfill against customer expectations in the marketplace. And, green dots or green text denotes where brands typically perform well, red dots where there are underperformance by brands in the marketplace. And this seems to relate to the fact that, we can see here that brands don't seem to deliver against value. We think brands need to deliver more on value, like talking up the benefits and gains buyers might get from doing business with that particular brand, rather than just talking about fees that are needed to be paid. MasterCard, they position themselves well in selling on the wider priceless experience, and they can deliver more, but we'll come to MasterCard as a brand later on. At the bottom, you see that some brands can definitely stand out and do more specific to developing their thought leadership. This only gets an amber or average performance, and also building on this vision and brand specific to a wider CSR goal. So these are the 6 ingredients that are evergreen, no matter which sector we look at. They're important, but there are some specifics and differences that we can see when we go to the financial services. So here you can see on this slide, these are the 8 specific ingredients that are specific to the financial services sector. And especially more ingredients aligned to the understanding and enrichment superpowers than we saw on the previous slides. As we look through this purchase journey, what starts to stand out is relatively impersonal. It gets more personal across the purchase journey as we go towards the quotes and then choosing an actual brand. And this, I suppose, fits in with the emotions piece of research that I talked about and started today talking about in 2019. So let's go through the journey. In the first instance, areas like quick to respond and adapt to changes, along with products that are not too complicated, are key to starting to build the brand into the consideration set. And buyers are then looking for a brand that's approachable and transparent. And in today's always-on world, support added information through the likes of chatbots or wider online communities, plus 24/7 assistance are crucial to any brand being asked to quote, especially in the financial sector. Then what we see is we get to the stage of choosing a brand and to actually deliver a quote, and typically that's 2 or 3 brands. And this is where we see the personal issues, those personal superpowers start to kick in. So feeling safe for the individual to contract with that brand and making it easy to sell the brand internally are both very important that we need to deliver on. What's interesting here is that for repurchasing, you can see at the very bottom of the slide on the right-hand side, trust is a key component. The product or service obviously cannot fail at the top, but buyers are looking for something more. And in this information age, they're looking for additional information specific to thought leadership that makes the brand stand out, but also recognition that the B2B decision-making unit is not just one person. And so talking different messages to the different needs of other stakeholders will certainly help cement relationships and allow for easier repurchasing, signing on that recontract or upselling other services in the future. So if I move on to show you how well in the financial services sector brands are delivering against this, you can see that it's a mixed bag, really. Financial services brands aren't necessarily delivering against all the market expectations, especially with the specific ingredients related to understanding there in the middle, tailoring and adapting a service specific to a customer's needs rather than an off-the-shelf solution. Plus in the preeminent stage, and this is vital as we know to gaining customer loyalty, so a real lost opportunity. And it's probably why we see in the financial services sector that over 50% of customers don't actually repurchase that brand again when the brands, from the brands that we researched. And so these two areas on the bottom right there can definitely, we can do more. So with that, I'm going to pass you over to Simon to share a PayPal case study of how they do differ to being progressive to all stakeholders in their particular sector.
Thank you, Nick. So just checking everyone back in, on the bottom there, you can see have a progressive approach to stakeholders. Not many financial services brands did particularly well at that. What we actually got people to do is to actually name the brands on the journeys. And PayPal was one that came out really well on this. So we thought it'd be worth just digging in to what they do in this particular space and exploring that a bit more for you. And three areas we're going to pull out in terms of demonstrating their progressiveness in terms of their approach to stakeholders. The first is a recent example, the PayPal Empowerment Grants for Black Businesses program, which offers grants of up to $10,000 to Black-owned businesses that have been impacted by COVID-19 and civil unrest, actively doing something about that particular issue in those particular communities. Back in 2007, the Unity program, which was founded to create more opportunities for women at PayPal, now has a grassroots team with a presence in over 35 PayPal locations across the globe. And if you kind of explore their brand experience more, what you realize is that they support several stakeholder communities in a very active and visible way, from PayPal Pride through to PayPal Thrive, which supports disabled communities, through to PayPal Serve, which includes military veterans, through to PayPal Aliados, which supports Latinx communities, and even PayPal Believe, which includes religions and faiths and worldviews. So what we can see here is this is a brand that in the research scored really well in terms of having a progressive approach to all stakeholders, and they are visibly and actively doing an awful lot of work in this particular space, which, as we all know, is hugely important in this particular day and age. So Jeremy, any thoughts?
Great. Thanks, Simon. So Jeremy Tate, I sit within our B2B Media Services group. And what I'm going to talk to you a little bit about is some observations that we've seen in working with a number of clients within the key verticals that the study researched, really some of the best practices that they're exhibiting when it comes to delivering on the superpowers. So, as has been discussed, really this does start with an understanding of the customer, really understanding their motivations, their needs, their triggers, all those things that help us then or help you deliver more relevant marketing and media programs. And we've seen varying degrees of success amongst financial services companies in terms of their ability to, manage identity. That's obviously a key aspect of marketing today in terms of understanding identity across a lot of disparate, potentially systems and brands, data management, enhancing that data, and really painting a complete picture of the audience, of the key decision makers, and even the, let's call it the cohorts that they serve. As you can see, again, from PayPal, they really do have an understanding of all their key stakeholders and what, messaging, what offers, what capabilities are important to them. And so really that's where it starts, is that understanding of the customer and all the different cohorts within, segmentation, developing, bespoke programs for different segments and things like that. Finding hand raisers. Another important thing that we look to do is identifying hand raising type of activities that, a stakeholder is giving us a signal as to what they're looking for from the brand, and being able to present them with relevant content and experiences, based on that. So that's really an important kind of aspect that we see varying, again, degrees of advancement within clients to deliver those superpowers. Another notion we talk about is almost adopting a CRM mindset to paid media. And what that means is, paid media marketing aren't just about acquiring new customers, but they're also critical to deepening customer relationships. Many of the financial firms, have a very strong set of first-party data and customer data from which they can develop cross-sell and upsell programs, next best products across touch points. And so really leveraging, the intelligence you have on your customers to, again, deepen and build relationships with them is critically important. And that's also orchestrating that across really all the touch points. So really being, again, a trusted partner, no matter what experience they have. The last thing I'll just point out is account-based marketing is a critical component as well. And really the advantage there is it obviously, as many of you likely know, it really brings together the sales and marketing engagement and process with a prospect and customer for a more cohesive experience with the brand. It helps, to expedite the process of making a selection of a supplier. And it ensures, again, that long-term relationship building and lifetime value is delivered. And so, really, these are some of the, best practices that we've seen with the clients we work with and the clients that we track around, ensuring that they're as relevant and timely as possible to those key stakeholders. So with that, I'm going to hand it back to Nick, and he's going to talk through the next section.
Thanks, Jeremy. Yeah, so where this research really gets interesting is when we start to look at the wider buyer experience, but how this differs in an actual industry sector. So what we've got here is just one slide for you, but specific to financial services, we've been able to categorize the data into 4 subsectors, and we've seen a really big gap between some of these differences. So what we do see in general is in the financial services sector as a whole performed well when compared to other sector verticals across all these different ingredients. It did fall behind the tech sector. Most of the brands that we saw that were leading the experience that they were delivering to their buyers happened to be in the tech sector. But the financial sector and the fintech sector was very much a close second there in delivering that ultimate experience across the journey. What we wanted to do, though, for today's purposes is just look at financial services. And here we can see that, when we look at the 4 different subsectors, business payment cards and to some extent, I suppose, payment processing companies met expectations more than the other 2 types of sectors, with credit and leasing companies faring the worst overall. And especially you can see there that the marked difference in being thought leaders in their category when compared to business payment cards on the bottom. Lots of different areas there, and this is just a taster of the way we can slice and dice the data to provide further insights and look at how different brands that we've captured in this research compare in different subsectors. So I'm going to pass you back to Simon, because I think there's an interesting case study for MasterCard that we can talk about related to this.
Thank you. So at the bottom there, the issue around being active thought leaders in a category or a sector. And again, one of the brands that got named that did particularly well with this particular ingredient of customer experience was MasterCard. So we dug a bit deeper, and 2 things just to pull out here. The first is that last year they launched the MasterCard Economics Institute, which was designed to analyse macroeconomic trends using its own data, but also third-party data. They set it up with a team of economists, analysts, data scientists to deliver points of view on global and regional macroeconomic trends that are relevant to their key customer groups, their partners, but also policymakers as well. So not only does it operate at that kind of macro level, it also produces thematic research covering issues such as consumer finance, risk, and small business finance. Again, very relevant to its customers, its partners, and its policymakers. And they've even gone one step further to have a newsroom that actually focuses on coordinating and promoting the research and reports to the customers, partners, and policymakers. So one aspect of how they demonstrate active thought leadership is that Economics Institute. Another one, which is visualized here top left, is what they call Compendium, which is a global thought leadership program designed to inspire data-driven innovation specifically. It focuses on the most advanced approach to innovative solutions to solving common business problems, and then kind of showcases those. And obviously, you can subscribe to that and discover more in terms of data-driven innovation. So again, just a good example of a brand doing particularly well in a category where active thought leadership is deemed to be important, but there aren't that many doing particularly well at it. Jeremy.
Sure, just to build on that, content marketing and the distribution via paid, owned, and earned channels is typically a cornerstone of financial services marketing. I would say that's the category that's really embraced content marketing most extensively. And really, it's for a lot of good reasons. It creates, awareness of capabilities, really builds credibility through demonstration of those capabilities, significant value exchange to stakeholders. So really, again, as you always talk about, tuning out banners and tuning out advertising. Content's a way to break through that. It presents many different opportunities, again, for that distribution, and really is a cornerstone, again, of marketing programs. Right now we're seeing, a lot of brands taking, and we actually hit on this on the PayPal example, but, brands taking more of a worldview towards their business practices and marketing and content. So you're really trying to demonstrate that doing good for people is good for their business. So, examples of this are ESG programs, really rising in popularity and in importance, sustainable investing, when you think of, again, the wealth management and asset management spaces, and again, really, trying to make sure that, the way that the brand represents itself through its content is, through the lens of doing good for its stakeholders and for society more broadly. We also see a lot of, clients and marketers, developing tools and commitments for underserved communities. Again, we talked a little bit about that in PayPal, because these all represent the future of growth. And so, again, representing through content is a critical aspect. The challenge is that it is a cluttered space because all competitors are also marketing heavily through content. It becomes a cluttered space, and it becomes challenging to be seen as a preeminent authority in certain areas. And so, what we advise many of our clients on is really taking a data-driven approach to informing that content calendar, the topics that, they're seeing interest in, that they think they have the best, point of view or perspective on, the formats in which they present that content to drive, maximum engagement, as well as, where that content lives, who it's targeted to, and things like that. And so, there's a lot of ingredients that go into the successful, distribution of thought leadership, getting it in the right hands and driving the right level of engagement and understanding. So some of the examples that we, again, advise clients to look at is things like paid and organic search behavior. So what is that telling us about what intent is out there in the marketplace? B2B data providers that can tell us buying intent, what's really important at a given time to key buyers. LinkedIn, what kind of content is being consumed on LinkedIn? What kind of themes is the sales team and the business development team hearing from those that they're selling into, and really using all these inputs to determine where you can win with your thought leadership. And so, again, an important aspect, an important ingredient, but needs to be optimized and really prioritized towards where you've got the best story and the best point of view.
Thanks, Jeremy. Really interesting context there. So what we've looked at is what's important across the journey and how companies deliver against these touch points. What's the experience like? But we don't just want to optimize that. Of course, we need to make sure we meet expectations. But if you're meeting expectations as a brand, what can we do in terms of opportunities to do something totally different and disrupt the marketplace? And to do this, we might want to look outside of our own sector and look at other sectors and what other brands are doing, and bring that across to the financial services sector. So one slide I wanted to share with you today was looking at some opportunities, and this is data outside of the financial services sector. So across the 4 different superpowers, we see all sorts of possibilities for disruption at all levels. For example, we've seen like reduce our costs or improve productivity. It isn't driving too many decisions in the financial services sector, but if we draw conclusions from other sectors like manufacturing or the tech sector, then demonstration of productivity is there therefore a call to do things differently? How can we improve the lives of our customers? IBM certainly took one approach on board and started to be totally transparent with payment fees and payment solutions, and we'll talk about that shortly as a case study. But knowing full well this buyer journey, lots of information, lots of needs before they even get in touch with a particular brand and start to speaking to a person. And Google called it ZMOT, zero moments of truth. Brands need to be in that place to be able to make sure that they're not thrown out too early in the buyer journey. If we look at the enrichment stage on this slide, in the financial services sector, keeping buyers up to date isn't as important as in other sectors, where it's very important at the researching and shortlisting stage. And if we focus on this ingredient, for example, it allows us to strengthen our brand position up front in the buying journey to help prospective customers to become more employable. So, again, winning early on in the journey, can we disrupt and do things that aren't necessarily what people are looking for at the moment? And finally, we know it isn't just one person to making the decision, and other influencers have a say on which brand is chosen. And if we look at the two preeminent ingredients at the bottom there, we've already seen that being progressive to other stakeholders is crucially important in your sector for repurchasing and upselling. But in other sectors, the progressive approach to all stakeholders was key at the researching stage. So, however, being a leader in innovation is vitally important in other sectors at both the researching stage and the shortlisting stage. So could your brand do more to talk about innovations in your field that help to differentiate your brand against the competition? Jeremy, I know you work across other industry verticals. You've talked about some of that already, but do you have anything to add on what we're seeing here on this particular chart?
Sure, certainly. This actually ties, I believe, to a question that was asked about, fintechs and how we've helped clients there. But, obviously fintechs are some of the biggest disruptors in the space. And, the advantages that they enjoy and that their customers enjoy, things like being built in the digital first world, right? So user experience is often superior. Nimbleness, ability to introduce new products and solutions on a faster time horizon, which in response to customer needs. And so, we certainly track the fintechs. Our clients who are more traditional legacy brands in the financial service space certainly track the fintechs. We've seen examples of those brands either partnering with fintechs or acquiring them in order to build out their solution set more. We see in marketing, attempts to kind of present solutions the way the fintechs do. So that may be things like developing more tools and things that allow, again, the party considering the solution to understand what it may be like to work with that brand. So taking things that may sit behind like a customer firewall and bringing them back into marketing. So, light tools and light experiences to, again, almost test drive what it would be like to work with the supplier. So we've seen some of that, and that, again, speaks to that accessibility point that we see. We see more rich, examples of content development. So maybe that's data visualization. Again, we talked about MasterCard, using their own transaction data to, produce insights and data visualization. So those are, again, examples of, how brands are trying to, provide a more relevant experience or a more similar experience to those that the fintechs can provide. And so, it's certainly innovation is rich in that space. And again, many clients are trying to think about how they are able to, innovate at the same level as those fintechs, where it makes sense to partner, where it makes sense to acquire, how they then introduce and bring those solutions into a larger solution set. And so, those are a lot of the observations that we're currently making in the space, especially as it relates to disruption in the fintechs.
Yeah, that we've definitely seen that in the fintech space with the likes of Intuit and Xero in the in the accounting space, for example, where they've really turned the market that was dominated previously by Sage. So good examples of innovation there.
Cool. So
Simon, do you want to pick up on it? Yeah.
One of the things that's interesting is we talked earlier on about expectations inflation, and what Nick's talked about is we've identified the characteristics of the people we research deemed to be important in financial services, and the list we've got here are those kind of things where not currently deemed to be so important. So imagine you're a brand like PayPal and MasterCard. You've got an opportunity to bring new things into the market and make them meaningful and make them make a difference. And so one of the brands I was going to talk about, which there are interesting parallels with, is IBM. Clearly technology brands, but there are a lot of parallels between kind of technology and financial services in terms of technical knowledge and expertise. And one of the characteristics of the technology sector has made really good use of, that's yet to be visible in the financial services sector based on the research we've done, is this idea of when you work with a particular brand, does it help keep you up to date as an individual and make you more employable? And this might be an idea that financial services organizations might borrow and import into the category and make meaningful, because customers are increasingly looking for more and more in terms of expectations inflation from their suppliers. So this is an example, IBM Partner World. It's got a very simple mission to help you grow. Quite simple, quite straightforward. As an IBM partner, you can join at no cost. You get access to tools and training for a variety of different roles, depending on your job type, from solutions architects to administrators and to developers. So for example, Developer Works, which is a section within this, helps developers find tutorials, connect with developer communities, and explore the latest technologies. Other training tracks that are available allow people to develop their data and AI service skills, and so on and so on. Interestingly, once you've been through all of these, not only do you have a greater level of skill and expertise, but also you get the IBM accreditation as well. So on successful completion, people can use an IBM stamp of approval. IBM technical validations. We know how to use this stuff and we're good at doing it. So interestingly, at the moment, this characteristic, according to the research, not deemed to be significant in the decision-making process, but nothing stops a financial services brand coming in, adopting it and making it meaningful to those people who are making decisions about the kind of financial services brands they might want to work with going forward. So clearly an opportunity based on the research we've done to disrupt the category a little bit. Mick.
Thanks, Simon. So lots of information that we've shared with you today. I think that the first, number one takeaway is that we've hopefully identified and shared with you the four overarching superpowers that make a difference to this buyer experience. We've got the two superpowers that impact on what people want at a company level: reliability and trust and understanding gets my needs. And then the other two superpowers that impact on the individual that they want specifically to them. So enrichment makes my life better, or preeminence, which is a brand proud to work for. And to point number two, we've shared lots of different ingredients, if you like, there's 30 in total that we know make up this intricate touch point in a customer journey across the different journeys that we've shared. And we've seen that elements play a role across the whole buyer journey, including, what's interesting for me, this thought leadership piece. We've used MasterCard as a case study today, but also working towards a wider impact on society. We've seen that definitely raise in terms of importance over the last 12 months. And it's not just at this upfront awareness part of the journey, but all throughout the journey. And we gave PayPal as an example there. So I think it's specific to three, providing an understanding of how these experiences work in the financial services sector. We've shared some of those differences and some interesting examples there, again, playing it back to the MasterCard and PayPal of how they've, they're seen and come to the fore of progressive brands and their approach to all stakeholders. So how can you use this research? What can it do for you? Well, we've given you a flavour of the robustness of what we've got. 3,000 decision makers, over 5,000 brands and data points across the journey. So we've got this large data bank of answers that can show which levers to pull to make a difference to B2B buyers. And what this means for your brand is we can carry out an ad hoc study to help benchmark your brand against similar brands in the category. But specific to that, we've just talked about there, in terms of, yes, we want to optimize how well we deliver against that experience, but there are lots of opportunities, and we can show you within our data what white space opportunities there are to allow you to step change and really start to differentiate yourself in the category. So lots of ground covered there, and we tried to get the full story across in just, 40 minutes. I've seen various questions coming in, so I'm going to pass back to Zoe, who's going to be moderate the questions that have come in over the course of the session.
Great. Thank you so much, Nick. And thank you, Simon and Jeremy, as well, for sharing today's content. There was definitely a lot to take in there. So as Nick said, we have had several questions come in. There's still time to submit yours. If you want to, you can use the Q&A pod on your screen. So I'm going to jump straight into the questions. This first one, Jeremy, I'm going to send over to you. Then, Simon, if you want to add to it, please do. So the first question is, what kind of support are small businesses in need of at this time?
It's a great question. The reality is a lot. COVID has really disrupted many categories and businesses. And so, really what we're seeing is if you think about, the majority of small businesses are actually micro small businesses. So, less than 19 employees, and in many cases, actually single employee small businesses. And so, those people in particular wear a lot of different hats. They need to manage their business itself, whatever product they produce or service they deliver, in addition to all the other things that are required to run their business: payroll, insurance, marketing, like all the different things that an SMB has to contend with. And so they need help. They need help from their suppliers. And so, one example actually is we had a recent engagement with a provider of small business insurance products. And in that, we found, and this is pretty consistent actually even across regions, is that, they increasingly want self-service options. So they just want more ability or more opportunities to work with the supplier and to research that supplier and to even engage with that supplier. They've certainly had to defer and deprioritize certain non-essential costs out of the system. And so, that's leading to some difficult decisions about, what costs do I take on? What are the essential things I must take care of? And so, that's a really important thing that they're contending with, particularly in certain industries like restaurants and hospitality, for example. Oftentimes their time in market is actually quite short. A trigger happens or something happens in their business, and they are quickly in market. Again, for an insurance solution. And so, there's a lot of things they're doing. They're also not experts in any of these areas. And so they need, trusted voices. And I think that's where suppliers can come in. And we talked about this, preeminence and other superpowers, which is, being more than just the solution provider to these SMBs. So not just being that insurance provider, but what other areas of running a business are you as a brand qualified and have credibility in order to guide these individuals through content, consultation, how you recognize the unique needs of each industry. A restaurant owner has very different insurance needs than a manufacturing small business owner. And so really getting deep into the markets you serve and the markets your customers sit within and understanding what their unique needs are. And so there's a lot being thrown at the SMB right now. And, it's important that, again, brands are trusted partners and advisors to them right now.
So just to add, we actually did a very specific cut of the data and compared SMEs to enterprises. And 4 kind of things jump out. In the reliability space, so trust people to deliver, they pretty much want the same as enterprises. They want stuff to work and you can kind of trust it. The understanding space, so in terms of do you get my business, there were 3 kind of ingredients which jumped out as being significant versus enterprises. The first one was have a smoothly integrated offering, so make it easy to integrate. The second one was products and services not being too complicated, so that cuts to the point I think you made there, Jeremy. And the third one was about products and services can be easily customized, with the emphasis on easily. When we move on to the enrichment and superpower, interestingly, one of the big differences that kind of came through is SMEs were more interested in being kept up to date and making them more employable than people who were buying on behalf of enterprises. And then finally, in the kind of the preeminent superpower, there was a distinct lack of absence with SMEs for characteristics like, for example, being leaders in innovative products and services and having a progressive approach to stakeholders, whereas enterprises value that much more in the decision-making process. So I think those are things just a reflection of what Jeremy's already talked about in relation to the research and quite specific cues as to kind of what SMEs are more interested in, what they value more versus enterprises. Zoe?
Oh, great. Thank you so much, Jeremy and Simon. That's some great insights there. So this next question, I'm going to throw over to you, Nick. So where are most of the financial services buyers mainly dropping out of the journey that you showed at the beginning of today's session?
Yeah, well, I mentioned as I was going through that, the problem that people have with retention. So at the end of the journey in a few of those slides, I talked about the fact that over half of buyers wouldn't spend more or buy more. That experience really isn't resonating with what they're looking for. It's not what they're after. So I think, but way before that, and let's start at the front end. It's similar numbers actually. 56%. Of the buyers that we spoke to could recall a brand that they rejected outright before even shortlisting or even going into any research. So the brands that people chose and the brands that people didn't choose are just as there in the forefront, and they chose them, chose not to start to research them for many good reasons of those that we've mentioned. But even then, when the brands start to become enter the consideration funnel, there is lots of leakage, and especially at that upfront stage. So what brands can do, to help to engage and really start to engage in terms of content or engage in terms of conversations really will help, because 62% of brands in the financial services sector don't even get to be asked to quote. So, it's only just a third of brands that actually get to submit a quote or proposal. So there is a real opportunity to make sure that you're doing lots of different things on the marketing funnel at that front end to make sure that your brand stands out and is one of those that's, one of the few that's chosen to at least enter conversations and get to quote.
Oh, that's great. Thank you for sharing those tips and tricks to everybody. So the next question I'm going to throw to you, Jeremy. So are you able to share any further examples of how you have helped clients in the fintech space?
So currently, at least for the clients that we work directly with, I wouldn't characterize any of them as pure play fintechs. They tend to be, more legacy brands that are clearly monitoring the fintechs and thinking about, how they have to respond to the threat that they present. One client we work with, again, has acquired a number of smaller fintechs over the past several years in order to build out a more robust product set and solution set, really to enable them, to be an enabler of modern business. So, this particular client is looking to obviously, build a reputation outside of their core, kind of cards and payments business and into, really more of a financial technology company that enables modern business. And, what they're trying to do is, maintain the image that the brand has, but somewhat renovating it, in terms of what it stands for now. And then ensuring that, again, their marketing is reaching the right solution buyers. So understanding, the different cohorts within their customer set to deliver the most relevant solution, whether it's a build on of a current solution the client owns or a customer owns, or a net new solution for a non-customer. And so, that's about the extent of, what I can speak to in terms of our direct experience, or at least my direct experience at this point.
Great. Thank you so much, Jeremy. I think we've got time for one final question here today. So I'm going to send it over to you first, Simon, and then I think, Nick, you probably have some thoughts on this as well. So following the pandemic, what do you think will be the biggest trends in B2B customer experience over the next couple of years?
I think based on this research, we talked about 4 superpowers. 2 of them add meaningful value to the company and two of them add meaningful value to the individual. The reliability and understanding superpowers are relatively well served. I think what we'll see as a reaction to where we've been when people are able to get out and about and start to interact more with people in person is brands focusing much more on the enrichment superpowers than the preeminent superpowers. So those that actually make a difference to somebody's work life, or those that actually people feel proud to be associated with. So I'd see much more of a focus on talking to and making meaningful connections with the buyers behind the decisions, as opposed to focusing purely on what it means for the company. And we've seen good evidence of that in terms of some of the financial services brands we've talked about. For example, PayPal, that are doing particularly well in those kind of areas at the moment. Nick?
Yeah, and I suppose building on that, outside, I suppose, of the superpowers framework that we've been talking about today, I mean, typically in the B2B world, things move very, very slowly. But actually what we've seen is the pandemic has meant that people have had to move quicker and change. And, the digital world that we now live in, things have changed more quicker than we'd expect. But basic things for huge companies in a B2B world have been, really difficult to do in the past, to move quickly. They're so big, they're spread out, they've got so many silos. And, again, taking examples outside of a sector, and Amazon's always typically used as something that, we talk about and laud in terms of a brand doing something right. But they will be rampant in B2B in the future. I mean, for example, in our consumer world, we know, what Amazon say, we know where you are, we know where you've been, we know what you want in the future, and we're delivering the product quickly. If there's a problem with the product, we'll replace it easily. This is the Amazon experience. And for most B2B companies, that's 10 years off, minimum. But in the next decade, we will see a focus on analytics, personalization, big data, cybersecurity, innovation, voice technology. Whatever you experience today with Amazon, I think, we'll definitely see every company doing in the future. And I suppose related to that, and we've seen it a bit already, specific to the pandemic, that's definitely accelerated the use of touchless CX. I know Forrester call this zero user interface or zero UI, but given that we're all trying to suppress the virus, people don't want to touch something, they don't need to say if signing a package. And when you get out of an Uber, you don't even touch your wallet, for example. We know that. So in the B2B world, I think we'll fastly see that changing because of the pandemic and being transferred across from the B2C world today.
Oh, that's great. Thank you so much for those answers there, Simon and Nick. So that's all the time we have for questions today. As a reminder, you'll receive an email from us in the coming days with a link to the on-demand presentation. I'd like to thank our speakers again for sharing some great insights into the financial services sector today, and to thank each of you for joining us today. We hope to see you at a future webinar. Have a wonderful afternoon. Thank you.
Thank you.